the broker seems to be monitoring your trades and then moves in the opposite direction. So you realize that most of the time you pick trades and then it seems you are going with the flow, and all of a sudden there's a reversal that hits you so badly, right? So today I'm going to touch on that. These are tips and tricks that the broker uses in order to make money. And always remember that you are not the only one trying to make money. The broker is also trying to make money, trying to sustain his business. So it's a war of prices and profit, right? A war of prices and profit. So in this video, I'm going to touch on the retracement trap and price channels, and how it makes everything seem as though the moment you take a trade, the broker is going in the opposite direction. So stick with me as I break down the myths, the tips and tricks. This is Dan Legend, and you're welcome to Boom and Crash Expert Advisor. This you see here, right? This is pure manipulation. Okay. Yes, I know the market would have to balance and all that, but this is pure manipulation, as it's abnormal. Now, when you see some of these abnormal trends, they are price manipulations to take out a lot of profit for the broker. All right. And then, because when the market ranges, everybody is profiting, both buyers and sellers. But there are times where the market will just take a sharp turn in an opposite direction because everyone feels it's going to buy. So there are a lot of people jumping on the wagon, believing that it's going to buy, and then there's a thick sell that clears everyone's stop losses. All right. So when these things happen, they are manipulations. For instance, you have this buying, and all of a sudden there's a thick sell, there's an extreme sell. These are manipulations. But then we have to go into the details of how it works out and how it plays on your psyche. Okay, so I'll zoom in here. This is H1 chart. Okay, and then we know the market is buying. This is a channel. If you were in the past and we were watching this market, realize that this is the channel. This is the channel. Okay, so price moves within this channel. Okay, breaks out of the channel, tests over here. Let me put my check sign here. Right at the check mark point is when price is supposed to bounce off. That makes sense. So as price breaks this channel, it retests the channel, the upper resistance line, and then it buys. This makes sense. But this sell here is what does not make sense. And you are going to see in the details of the sell the various manipulation and the various retracement traps that were placed in it. Now, the first point that the market should have reversed was here, because in as much as it had broken this resistance point, it was supposed to bounce off this. We understand if price breaks, makes sense, right? So going inside, this was supposed to bounce off, but it didn't. We are fine with that. And then the market reaches the resistance line here where it bounced off. It does not bounce off, breaks it, because you see the broker knows that at this point in time, you see that there's a lot of slowing down and a lot of longer candle wicks, which suggests that the market is turning. But then a lot of people are going to place their stop loss under this line, thinking that, okay, if it breaks it, then it's probably going to sell. So they are going to set their stop losses here beneath that line. And then when it breaks the line, it touches the stop losses, and then the broker tends to buy. Then instead of buying and going up to hit this point, this diagonal point, instead of buying to hit this so that it bounces off this instead. The very place you entered a trade that it should buy and then set your stop loss right beneath it. It goes back to that point, You are going to go into the details of it. This is just the surface. I want you to see this. It's very interesting. And it bounces off from here and keeps selling. Now, the real retracement traps are placed in these positions. Trap 1, trap 2, I think this is it, yeah. Trap 3, and we are currently approaching a 4th trap, which I don't know whether they are eventually going to make it a trap or not, but I'm still watching. Coming to a lower time frame, you begin to see this very clearly. Good. Now this is what's happening here. There's even a first one I missed here. So this is what happens. It breaks this, okay, hits your stop losses, tends to buy. Then you are thinking, okay, the market is buying now, so let me enter a buy. And then when you see, this is where you want to be very, very careful. When you see the market trending this way, always wait for a break. Because if you jump in thinking it's going to buy based on the fact that it was trending from a high, they are going to spike speedily. Now, watch this. The gap between these two channels are sharp spikes. 1, 2, 3, 4 continuous spikes. Here, once you see this, you know that there was a retracement trap and they are trying to hit everyone's stop loss as fast as possible. So in the fastest possible time, the spikes will rush downward to clear your stop losses. Then the market will begin to trend as though after a lot of spikes it's going to buy. Then it will create another channel. So it creates a channel to pile up more buyers or sellers depending on which market it is. So the buyers are piled up here, and then it breaks out of the channel and spikes continuously to clear stop losses. Then there's another channel, then it spikes continuously to clear the losses. Then there's another channel, spikes continuously to clear the losses. And there's currently another channel. Do you see that? There's currently another channel here. So this is what I call the retracement trap. It's as though it's retracing, but you have to take note of the channel. You have to be very, very cautious about the channel. Then another way is to use your Fibonacci retracement tool. So if we go to a higher time frame, that is on the higher time frames. Okay. You would trace from the top of a trend with your retracement tool to where you see it retrace. So usually when you see a market trending, don't be in a hurry to enter a trade. Okay, sometimes you are just predicting, you are trying to predict the future, but then you have to be patient and look at the current price action. So from here to there, we see the market retrace by 23.6, and most of the time retracement traps are found between 0 and 23.6. When you see a channel broken with a lot of spikes and there's another channel, be careful before you enter. Don't just enter a buy because there've been a lot of spikes. You might be entering a lot of losses that way. Right, so do drop a like on the video if you liked it and if you are well educated. Also subscribe to the channel and join my Telegram group as I update you with stuff that I'm doing. Right, so thank you for watching and I'll see you next time.